from the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Tesla shares up in late trading after reporting second quarter results. Strong demand for its electric cars continuing as Elon Musk's company suggests this year's deliveries might exceed its longer-term projections for 50% growth. Plus, the continued China crackdown rocking investors throughout the day, sparking questions about how far President Xi Jinping is willing to go to tighten his grip on the massive economy. And Robinhood reshaped how small-time traders buy and sell stocks. Now it's trying to entice them to invest in companies going public, including its own. Why the company made the unusual decision to make its roadshow presentation public for all to watch. We'll get to all that in a moment, but first let's take a look at the markets with our own Kriti Gupta. Kriti, Megacap Tech leading the way. What did you see?
Absolutely. When you start to look at the surface level, not a ton happening in markets. Take a look at this. The S&P 500 just closing up 0.2%. Yields even higher. Some money coming out of treasuries. The real yield, however, hitting an all-time low, 112 basis points. But Emily, all the action was in those tech stocks. Take a look at this next part of the chart, the Golden Dragon Index. That's really the index holding all those Chinese listed companies or U.S. listed companies, of course, that are from China. This really taking a massive hit, another massive hit after having its worst day since 2008 back on Friday. A lot of this has to do with the orders from Beijing to on their education stocks in particular, saying that, you know what, you should maybe turn into a non-profit company and not focus so much on the profit. This, of course, follows a lot of their kind of push to pull a lot of those IPO companies here in the States back to Beijing, keep the market domestic. And it's that sentiment that brought down the New York FANG index as well. Some of that sentiment bleeding into American tech. Let's just zoom out the chart and see how they did on a one-year basis, because you can really start to see the divergence. They usually trade side by side, but then they've started to diverge, and you've seen it come with some of that growth outperformance here in the States. But that global tech trade, not so global anymore as you start to see that Chinese regulatory scrutiny really weigh on those ADRs. So let's just go micro really quickly. A hard pivot here to Tesla after hours, because they also just came out and said they're actually doing great in Shanghai. You actually see a major boost for them after hours, up almost 2%. Emily, a revenue beat, an EPS beat. Great news coming out of Tesla. But here were the headwinds. A $23 million Bitcoin impairment, supply chain issues, and less regulatory credit. But even with all of that, they said they're expecting their car deliveries to grow by over 50% by the end of this year, Emily. So it looks like that stock has some room to run.
All right, Kriti, thanks so much for that roundup. Sticking with Tesla second quarter results, I want to bring in ARK analyst Tasha Keeney. Tasha, Tesla beating across the board, expanding production on 3 continents. What are your headline takeaways here?
Yeah, well, you all just touched on it. I think one of the big takeaways is that they said that Shanghai is a big export hub for them. I think that'll help them on margins. I also think, this is what the Chinese government wants. They've wanted to be an auto exporter for years, and Tesla is making that possible in electric vehicles, one of their, areas that they really have been focusing on over the past 5 years. So I think that's huge. In my space, we also saw that the FSD beta version 9 was recently rolled out to customers. Videos look good. It's not perfect, right? Dense urban areas like San Francisco, still tough for the system, but in suburban streets, it's pretty good. And this is its vision-only system. I just put out a Medium piece. We think that the ride-hail opportunity is an $11 to $12 trillion opportunity, and Tesla's data advantage is really huge there.
If the ride-sharing opportunity, when do you see that actually starting to play out?
Yeah, well, so I think over the next, say, year or two, we could see the first implementations of a fully autonomous version of autopilot. Again, I think the beta program is sort of the early innings of that. Elon has said that by version 10 or 11, we're on 9 right now, they'll make the release to all customers to download. So I think that's sort of the next step to look for. And then maybe over the next year or so, the first implementation of full self-driving. But we think this could be extremely profitable, totally change the business model, become a recurring revenue stream. At the same time, if Tesla were to fall short of meeting that deadline, we actually think they could profitably run a ride-hail service today because they have better economics than Uber and Lyft. Their cars are cheaper per mile to drive, and I think the verticalization of the Tesla strategy could really help them in that market.
Now let's talk about the potential weak spots. Tesla saying the chip shortage is still problematic. How much of a challenge do you think that is going to be for Tesla in particular? How much uncertainty is that injecting into your models?
I'm glad you asked that, Emily, because I think one of the other really interesting things of the report is they said that they're working on 19 new variants of controllers. I actually think that Tesla, compared to other automakers, is really set up well to deal with this shortage because of the talent that they have in-house. Both the software and the hardware teams that they have allow them to actually explore those new opportunities, write new firmware, and actually make decisions quickly to adopt a new strategy when you have a chip shortage. So again, I think, yes, while they are affected by it, like every other automaker, I think that they're better set up than most to handle it.
Now, the company recorded a $23 million charge against their Bitcoin holdings. Of course, everyone wants to know if Tesla's going to start accepting Bitcoin again. Elon has given a few hints, but certainly hasn't confirmed anything. How concerned are you about Tesla's Bitcoin position, and would you like the company to start accepting it again or not?
Yeah, ARK Invest has done a lot of work on Bitcoin. My colleague Yassine is an expert on the area. In general, Bitcoin as corporate cash, we wrote about this in our Big Ideas presentation earlier this year. If 1% of all S&P 500 companies if they devoted 1% of their cash to Bitcoin, this could actually up the price by about $40,000. And, we think that this could be a smart thing to do. If you're a company like Tesla that wants to, operate in many different markets, for instance, instead of hedging that foreign currency, you could accept Bitcoin. Now, Tesla did pause accepting payments. Elon had said that he was looking to be sure that the energy that's used for Bitcoin is clean energy, right? But actually recently, last week, on the B word, which Kathy, our CIO, participated in, she spoke with Elon and Jack Dorsey. He actually seemed incrementally positive on Bitcoin, I have to say. And he said that they're looking to make sure that a certain percentage of mining will meet that clean energy requirement. But it sounded like he thought more likely than not they would in the future again begin to accept those payments in Bitcoin. So I think it's a smart move on their part. I think that the accounting treatment of Bitcoin might be reconsidered in the future, and Kathy has said that in the past, the way that it's treated right now as an asset. But in general, for transactions, it actually could be a pretty smart move.
I want to talk a little bit about the China story. Production in Shanghai remaining strong, huge market for exports, but the mix is changing a little bit. We're seeing more lower value cars being sold. What are you looking for specifically when it comes to China, and how do you expect that story to play out?
Well, I think that'll definitely come up on the call tonight. So that's something that I'm looking to hear. I think specifically for China, again, the big news is that it's an export hub. I think that's something really key to watch out for. Although, in terms of the average selling price, in our valuation for Tesla over the next 5 years, we do think that as they expand, as volumes grow, they can only penetrate so much of each price segment before going down to the next segment. So, it's not too much of a surprise to see this mix shift temporarily change things. I think one of the bigger things that we're looking out for is, how sort of autopilot is working in China. Right now, if you look at it compared to competitor systems, it might not be quite as good as some of the Chinese-owned companies. I really think they're focusing most of their effort on the US, but they are working on setting. And that's actually not a bad idea, by the way, to focus on the U.S. because we think that's a larger opportunity if you look at how high ride hailing is priced here. It's about $2 per mile. In China, you can get rides for 50 cents per mile. So there's a bigger opportunity to exploit there as autonomous brings down the price of point-to-point travel. That said, I'd like to see sort of how that develops in China. How sort of autopilot is tracking there relative to competitor systems, sort of what they're thinking about data. I think they've been really cautious on that, which is a good thing, seeing, as we've seen the regulatory environment change there. But it'll be interesting to get any sort of update.
All right, Tasha, I'm going to let you go. Listen in on the call. Tasha Keeney of ARK Invest. Thank you, as always, for joining us. We're going to be listening into that call as well and bring you headlines as we have them. We've got plenty more tech earnings also coming up this week. Tuesday, we'll have results from Apple, Alphabet, Microsoft, and AMD. Wednesday, it is PayPal, Qualcomm, and Facebook, and Amazon Thursday, as we round out the week with Expedia and Grubhub on Friday. And of course, we will bring you all the details on every single one. Make sure you stay with Bloomberg throughout the week. Meantime, the world's largest maker of semiconductors is considering expansion. Taiwan Semiconductor Chair Mark Liu told shareholders the company may build a chip-making plant in Germany. This in addition to the one TSMC may build in Japan. Chip makers have been cranking up production to deal with shortages that have hit car makers like Tesla and other customers hard. Coming up, China's clampdown on the booming private education industry rocks investors and raises questions about how far Beijing is willing to go as it tightens its grip on the world's second largest economy. We'll discuss next. This is Bloomberg. One of China's first Bitcoin moguls says the crackdown on cryptocurrencies by Chinese authorities will probably intensify and may even lead to an outright ban on holding the tokens. Bobby Lee, the founder and CEO of crypto wallet maker Ballet, spoke on Bloomberg Television earlier.
At this point, I do fear that possibly in 4 or 5 years, the country might even outright ban it, but it's too early to tell. So basically, the regulators always have that final step, but they so far have not decided to put that nail in the coffin yet. So it's a wait and see approach.
Meantime, China has announced a broad set of reforms for private education and tutoring business that have been booming until now. The Chinese government wants to decrease the workloads for students and overhaul a sector it says has been, quote, hijacked by capital. Education companies will be banned from making profits, raising capital, or going public. That sent shares of edtech companies plummeting. This as China-listed companies in the U.S. more broadly are seeing back-to-back losses. Bloomberg Sherry on joining us now with more. And Sherry, the biggest back-to-back losses in over a decade for some of these companies. What's your broader outlook here?
Yeah, since 2008, right? We are now seeing Beijing really get into the markets, whether it's on Bitcoin and the crypto markets or just tech or education stocks now. Even property management companies really under the gun at this point. This is the biggest two-day drop since 2008, as you say. We're talking about the lowest level since last year. It's sort of a tale of two tech trades at the moment. You are seeing this GTV chart on the Bloomberg showing the onshore Chinext gaining more than 15%, but the world's worst performing major tech age being the Hang Seng Tech Index, given that it includes giants like Tencent, Meituan, and of course the Nasdaq Golden Dragon Index down in the double digits. Now, when it comes to those education stocks, analysts have been slashing their profit forecasts. Bloomberg Intelligence now saying that the operating losses at companies like New Oriental, like TAL, could just worsen from here. The cost cuts won't keep pace with revenue decline. Some of the largest investors like Cathie Wood have already gotten out of the market, but there are many others, especially ETF traders, that have been piling into these Hong Kong and Chinese stocks.
Meantime, also that crypto crackdown, the interview you and Heidi did with the founder of Ballet, you mentioned Meituan facing some new regulatory issues. What can you tell us about that?
Yeah, this has been another leg of the regulatory concerns in China, right? 7 different agencies in China now releasing new guidelines saying that online food platforms have to respect the rights of delivery staff and ensure workers earn at least a local minimum income. This coming at a time, remember, during the pandemic, Meituan has been under scrutiny for allegedly mistreating its riders and its workers. And now they're already under a monopoly investigation. So already we've seen a 50% hit in their stock price since February. And this GTV chart on the Bloomberg showing, yes, since they bottomed out in March of last year, they've outperformed other tech giants, which isn't really saying much given that they've been under pressure as well. But we've seen this huge fall this week, given now the latest on the food platforms as well. Chinese tech and education stocks losses now exceeding $1 trillion.
And Sherry, this is leading to a much broader discussion about a financial decoupling between the U.S. and China. Is that what the Chinese government really wants? I mean, on your side of the Pacific Ocean, what does it seem like Beijing is actually going for here? What is the end game?
That is really the hundreds of millions of dollars of questions, right? Because so many people are wondering, what's the end game for China right now? There's actually a really good Bloomberg opinion column by Shuli Ren saying, does Beijing not want foreign money? Are they antagonistic? Are they closing China Inc.? Not really. They don't care the foreign investors are losing money, but they have their own priorities. It's not about that. It's more about reining in tech titans, protecting social equality, given that, of course, you don't want the social unrest in China. You don't want to put the Chinese Communist Party under threat. So these regulatory risks are nothing new in China. Something that investors have to keep in mind, I guess, is that the Chinese market, as big as it is, the Chinese market is worth $12 trillion. The Hong Kong market, $6.7 trillion. They're the second and third biggest markets behind the U.S., but still, Beijing policymakers can change their minds so quickly. Everything moves so fast. So you have to bear that in mind when you go into that market.
Absolutely. Sherry An, co-host of Bloomberg's Daybreak Australia, Daybreak Asia. Sherry, will be watching your coverage over the next couple of hours. Thanks so much for your insights there. I want to take a look at some tech stories now making headlines around the world. Indonesia's most valuable startup, GoTo, in discussions with investors to raise as much as $2 billion ahead of its dual listing at home in Southeast Asia and here in the U.S., this according to Bloomberg sources. The company was created in May through a merger of ride-hailing giant Gojek and e-commerce provider PT Tokopedia. GoTo is part of a fast-rising group of companies taking advantage of investor interest in the region. Grab and Property Guru are also planning to go public in the United States. Jaguar Land Rover, owned by India's Tata Motors, says it's set up what it's called a full-time mission control center to limit damage due to the chip shortage. The company posting a net loss of almost $600 million for the quarter, which was bigger than anticipated. Jaguar Land Rover is saying it's staging board-level reviews of the chip issue a couple times a week. The car maker has also blamed one supplier for its shortage specifically, but hasn't identified which company that is. All right, coming up, Boeing will put its battered engineering reputation on the line again this week when its Starliner spacecraft blasts off from Florida. In today's Big Take, we'll look at the challenges facing the company as it competes with SpaceX and Blue Origin. That's next. This is Bloomberg. Space ambitions for Boeing are getting a take two, but will their engineers be able to handle the mission? The company's getting ready to launch its reusable crew capsule, the Boeing Starliner, on Friday after its first trip in 2019 almost ended in disaster. Boeing may also be having challenges retaining employees. Joining us now for the Bloomberg Big Take is our Bloomberg opinion columnist, Brooke Sutherland. And Brooke, it seems like the space race has really heated up just over the last few weeks with successful launches from Virgin Galactic and Blue Origin taking humans to space. Talk to us about where Boeing fits into this race. Obviously, it's been a more troubled road for them, though they are a historic competitor here.
They are. I mean, they really sort of had this market cornered for a while, but then you've really seen a lot of success on the part of the upstarts. And I think, you know, as for Boeing, that has to make them sort of question, where do they fit into the competitive landscape going forward? How can they really be a leading player in this market?
So what are the talent challenges they're facing? Are they losing engineers to SpaceX or Blue Origin or elsewhere?
It seems like they are. Based on the reporting from my Bloomberg News colleagues looking at LinkedIn data, you can really see a pattern of people leaving Boeing and going to some of these other companies. And it's not just the space companies. Amazon is another huge draw for Boeing employees. And of course, they do have that Seattle connection. Also, some of the other Seattle-based companies like Microsoft, and you can understand the appeal. It has not been fun to be a Boeing engineer in recent years. A lot of the company's problems have been engineering related. It's in the headlines for all of the wrong reasons. The company has had to cut thousands of employees to try to keep the ship afloat during the pandemic. And, they're not really looking to do very many innovative engineering challenges going forward. There's been a lot of talk about whether or not they might come out with a new jetliner, but they have to be very conscious of cost control. And so as an engineer, you can understand the appeal of wanting to work for some of these other companies that are putting innovation more at the forefront.
Meantime, there have actually been more than 110,000 job cuts across the aerospace industry through the pandemic. Why exactly is that happening, especially if it seems like from the outside, the aerospace industry is accelerating?
I mean, they had to. During the worst of the pandemic, these companies some of them were losing money. Others were, just barely making by. And it really took a hit. And, up until a few months ago, people did not expect air travel to come back in any kind of meaningful way for years, potentially. And then the actual recovery has ended up being much stronger than anticipated, particularly in the US. And so a lot of these companies are going to be looking at a pretty serious hiring crunch because they're competing not just with other industrial companies, but as we see in the case of Boeing, with tech companies, which fared much better during the pandemic and have actually been hiring workers throughout this entire period. And so it's really going to be a challenge for the entire industry to get those skill sets that they need to keep up with demand once it really does start to recover for new jets.
Boeing also needs to sort of evolve its reputation. And I guess, is it the U.S. government or NASA that they really need to impress? What's your outlook on whether they can pull that off?
I mean, I think they have to do a reputation overhaul where everybody is concerned, from the FAA to NASA to customers to investors. I mean, the company really has a lot of work to do to get, back on the right foot. We just keep seeing these challenges pop up at Boeing. They keep having problems with their planes, with the spaceship, with some of their military projects. And it just really does make you wonder, have they learned all the lessons that they need to have learned from the 737 MAX crisis to really steer the company into a new era? Are they putting an emphasis on quality over cost control and other concerns like that? Are the engineering voices being heard to the extent that they need to be?
All right, well, we're going to certainly be covering every aspect of that Starliner launch on Friday. Our Bloomberg opinion columnist, Brooke Sutherland. Brooke, thanks so much for sharing your insights here. Okay, coming up, a roadshow for all. Robinhood throws away conventional IPO standards and opens the roadshow to the public via live stream. What to watch as the company hits the market later this week is next. But first, take a listen to the CFO talking about the company's focus. This is Bloomberg.
You're going to see a lot of focus on products that can deepen our relationship with customers. On the brokerage side, our focus is turning first-time investors into long-term investors. You can see the beginnings of this with some of our newer products.
This is a very special moment, and we're humbled by the large number of customers who are accessing the markets for the first time with Robinhood. We believe in democratizing finance for all, and together we will continue to change Wall Street forever.
Robinhood CEO Vlad Tenev there during the company's roadshow, the company continuing to buck IPO tradition, this time addressing investors in a live stream presentation, also known as a roadshow, that's typically limited to hedge funds. Robinhood taking the unusual step of making that event open to the public. Our Annie Massa, who covers Robinhood for Bloomberg News, joining us now to discuss. So, Annie, I guess this sort of fits into the idea of Robinhood trying to democratize investing. What do you make of the fact that they opened this live stream to the public and what they had to say?
Exactly. Well, Robinhood is really trying to show that it's doing its IPO differently than other companies usually do. So one way that it tried to demonstrate that to its investors was by hosting this public roadshow that anyone could live stream, where management was talking about the business and also taking some customer questions, which is different from how you would normally do it, where it would just be a presentation for institutional investors. So that's just one way that they're trying to show that their IPO is different.
So what are the questions investors are asking? How excited or apprehensive are investors to buy into Robinhood's IPO, given the potential but also the controversy?
There was a range of questions. One thing that did come up was how worried the company might be about any regulatory action around payment for order flow, which is kind of esoteric, but a key way that it earns money based on transactions that's come into play in Washington. Again, this periodically comes up. So investors asked about that. Robinhood basically said that they will monitor that closely, but that at this time, they're not that stressed about any kind of regulatory action on that front. They also came out with a question about how the company might grow in the future. And they talked about, kind of vaguely, they talked about areas they might grow into, looking at debit and credit card and rewards type payments. So that was another thing that came up in the roadshow.
Now, I had a couple of chances to sit down with Vlad Tenev earlier this year where he addressed, the sort of GameStop mania. He also talked about how, in his view, investing shouldn't be limited to a certain group of wealthy people, but it should be ubiquitous. Take a listen to part of that earlier conversation.
I think you can look at our vision broadly and say that right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do. And moreover, I think there's an opportunity to expand that beyond the U.S. There's no reason why the greatest financial system the world has ever seen should be only available to Americans. We can make that available globally, and not just to high net worth individuals and the wealthiest 1% globally, but to the mass market. And so I think that's a huge opportunity.
Meantime, Annie, Robinhood is setting aside 35% of its shares for its own traders, but I wonder what's the likelihood that Robinhood becomes a target, for better or for worse, of retail investors who've been responsible for some of the mania in whether it's AMC or GameStop over the last several months?
It's a great question, and one that will be certainly on everyone's minds on Thursday when Robinhood begins to trade. In its risk factors, in its paperwork ahead of its IPO, Robinhood even kind of made mention to the fact that there's been some volatile trading via its platform in certain names, like the ones you mentioned, and that Robinhood may not be exempt when it begins to trade from that kind of volatile trading activity in the retail markets. So that'll be something that we'll have an eye on for sure.
All right. Well, I know you are going to keep us posted over the next few days as we get closer to that IPO we're expecting to happen later this week. Bloomberg's Annie Massa, who covers Robinhood for us. Thanks so much. Meantime, another company going public, EV maker Lucid Motors, began trading on the NASDAQ Monday after merging with blank check company Churchill Capital. Lucid CEO Peter Rawlinson spoke to my colleagues Danny Berger and Alex Steele earlier.
We're going into production with the Lucid Air this year, and we're on track for this year's production schedule and next year's. And the $4.4 billion means that we can accelerate our growth as a company and mitigate execution risk.
Okay, so production can start this year. I'm sure a lot of shareholders are looking forward to that. But speaking of your shareholders, you did have to make an appeal in order to get this transaction done, this SPAC done, because a lot of the shareholders are retail investors. What does it mean to you to have such a large retail base who owns your shares?
Well, isn't it wonderful that the reach of our mission has reached so many people in the retail sector? But we have an illustrious roster of traditional institutional investors as well. So we have this dimension, this diversity, which is attracted to our technology and our mission. And I think it's a great situation.
In terms of that, though, it feels like it's going to set you up for a lot of execution risk. In that, you got to meet your targets. With the valuation as big as you have, with the retail base as big as you have, you've got to meet the targets in order to deliver. What are some of the factors, what are some of the question marks that you need to be closely monitoring to make sure you can hit those numbers?
Absolutely. Execution is everything now, and I tell my team that every day. We haven't achieved a thing as a company until we've delivered our car to satisfied customers. I spend time in the factory every week now, making the teams operate cohesively. This is a huge push now in execution mode, and the main factor is just getting the quality right. We started building our run of production cars. We've already started that, our quality validation run. And make no mistake, these are the cars that once the quality is right, will be sold to customers.
But within that, if you're in the factory nearly every single day, surely you must see some of the supply chain issues that have come through. We saw Rivian delayed the start of its production because of the supply chain. Just how bad is it out there right now, Peter?
Yeah, the supply chain has been hit by COVID, and that's undeniable. It's meant that our quality people have not been able to visit certain suppliers to do their audits, which would be the norm for a business like ours. So we rely upon 250 suppliers from right around the world for about 3,000 parts. So this is a significant logistic operation. Mm-hmm. And many of those suppliers have produced wonderful results. We're having to support some of those suppliers that need that extra help to get them across the line in terms of their component quality. But we're getting closer every day now. I'm confident we're going to have a fabulous motor car in production this year.
Peter, as Danny was mentioning, it's not just chips, but it's also things like cobalt or lithium, like the guts to make the cars. The chips might be the problem in the short term, but longer term, there's still going to be some resource problems. Are you going to have to bring some of that internally? Do you have to sort of make acquisitions so you can help shore up a supply chain? What do you think?
Well, that's not an immediate solution. Regarding the chips, we're pretty good because we bought ahead for the near term. Longer term, I think the problem will go away. But for medium-term planning, at the beginning of next year, we have risk mitigation strategy, including alternative sourcing for some chips and alternative PCB designs to accommodate those. I think we're in a good position. We have a number of backup plans in place. And remember, it's not like we're going into true mass production immediately. We'll gradually scale up our production on an S-curve. And because of that, we don't have the demands in the near term that a major automaker would have. And we played that to our advantage.
So can you get more specific about that then? Exactly what is production going to look like this year when you do begin, if it is a ramping up type approach?
Absolutely, absolutely. We'll move from 2 cars a day to 4 cars a day to 10 cars a day to 20 and so on. And we will be limited by our ability to make the quality right. If the quality isn't right, we'll slow things down and get it perfect. This is the sort of approach that our discerning customers rightfully demand.
Lucid Motors CEO Peter Rawlinson earlier today. All right, coming up, Bitcoin tumbling after Amazon denies a report that it'll start accepting digital currency. We'll have the latest on yet another volatile day for crypto next. This is Bloomberg. Bitcoin retreating from its high today after Amazon released a statement denying a report that it plans to start accepting the cryptocurrency this year. Amazon also saying it's not planning to launch a crypto coin next year, but it will continue to explore cryptocurrencies. Let's get the latest on Bitcoin from Bloomberg's Kriti Gupta. And Kriti, Bitcoin going way up after that Amazon job posting focused on cryptocurrency, but Amazon dashing the speculation. Talk to us about how this played out.
Absolutely. Well, 40,000 Bitcoin's back to that level. But before I dive into the specifics, let me show you the macro environment that we're working on because it all kind of plays together. Wasn't a particularly risk-on day. When you see Bitcoin surge, you tend to see stocks, those riskier kind of investments surge with it. Today, that wasn't the case. You even saw yields higher, the real yield hitting an all-time record low, and gold and the dollar actually down on the day. So it really tells you here that with this background, Bitcoin was kind of poised to thrive a little bit. But to the extent that it did, that was the real shocker. If you just look at a 1-month chart, 40,000 is a massive change from what you've seen in the last month. I mean, you've seen this kind of downward trajectory. And then, of course, that surge, like you said, all on an Amazon job posting. And let me tell you exactly what the posting said. They're looking for a digital currency and blockchain lead. And even in the job description, Emily, it didn't specify the crypto or Bitcoin in particular, just said they were looking to explore it, and that's what the job would entail. Now coming back and saying after the close that it actually denying 2 key points. You mentioned this in your intro, this idea that not only will it not accept Bitcoin as a payment, but Amazon is not planning on launching their own crypto coin in 2022. And that's where you're starting to see a little bit of a dip back to that 36,000 handle, down from the 40,000 handle. But let me show you what it did intraday to some of the other players that are very highly exposed to Bitcoin in particular. The Bloomberg Galaxy Index up, taking all those crypto stocks with it. Ethereum now taking into that Asian trading session, but during the day was really surging. And of course, even those crypto stocks, Marathon Digital, Riot Blockchain, up over 20% on the day, Emily. So if Bitcoin's surge continues tomorrow, you'll definitely see that ripple effect.
All right, Bloomberg's Kriti Gupta, thanks so much for that update. Meantime, Amazon Web Services recently announced a new product that aims to make storage for enterprise customers faster and more efficient than ever. This is key for businesses that are pivoting to the remote work world and need to process massive amounts of data at a finger snap. For a look inside the cloud network of the future, I want to bring in Milan Thompson-Bukovac, Vice President for Amazon Web Services. Milan, great to have you with us. I'd like to start by you putting into context just how much data AWS actually processes and how did that increase over the course of the pandemic?
Well, the pandemic, Emily, has been a crash course in why all companies in all industries really need to be on the cloud. If you think about the customers that were on AWS or were starting to be on AWS, those were the companies like Zoom and Epic Games that were able to scale incredibly quickly based on their demand surging, just like we had customers where their industry was maybe contracting, like the tourism industry. Those customers were able to save money on a dime, as it were. And so, if you look at the growth of data, really, analysts are predicting that digital data grows at a rate of 40% year over year. And so every business leader, no matter what industry you're in, one of the most important decisions that you're going to be making is where to put that data. And Block Express, which you mentioned, is just the latest innovation from AWS in a long line of innovation and pioneering in cloud computing to help you put that data in the right place.
Okay, so talk to us a little bit about Block Express. This is an improvement of AWS services. How will this, in the simplest terms, better meet businesses' needs for a remote work world?
Well, enterprises for years have been buying traditional hardware appliances for storage area networks, or SANs. And Block Express is the first SAN in the cloud. Now, enterprises are spending just this year alone over $22 billion on just SANs. And now with Block Express, they have a much better option. You have the performance of a SAN, but you have the pay-as-you-go capability that AWS gives you, which means, unlike the old model where many enterprises just overbought, they overbought because they didn't want to get stuck not having what they needed for that growing data. And now you don't have to do that. You paid for what you need, and then you can increase or decrease in just minutes based on what your business data is moving.
Now, Andy Jassy, of course, was the CEO of AWS for many years. He's now the CEO of Amazon, and Adam Selipsky taking over as your boss, essentially. I'm curious what he's communicated to you so far about his priorities and strategies in this new world where cloud is ever more important.
Yeah, so Adam was in AWS before. I've been with AWS for 11 years now. I've worked with both Adam and Andy Jassy, who's, as you say, the CEO for Amazon. And really the mission remains the same. We're here to provide the most comprehensive platform of cloud technologies for industries and companies all over the world to drive the innovation that they're doing for their own customers. And so that mission hasn't changed. I think, the innovation in AWS, it's in our DNA. Block Express is just one example of a long line of 15 years of innovation. And so Adam is going to be heading the charge to take that forward into the upcoming years.
Now, obviously, this Amazon crypto posting got a lot of people talking and crypto markets moving. I know Amazon has put out a statement dispelling some of the speculation, but there's no denying that there is a great intersection between the blockchain and the cloud. And I know that AWS has been exploring there. I'm curious if you're more optimistic about the future of crypto and blockchain as it relates to the cloud, given the exploration that you've done thus far.
90% of the AWS roadmap comes from customers who ask us for specific capabilities. And cryptocurrency is no exception. We're going to listen to what customers are asking for, and we're going to look at the technologies and innovate to deliver what they need.
All right, Mylon Thompson-Bukovac, thank you so much for joining us. Vice President of AWS, great to have you here on the show. Thank you. Okay, well, the Tesla earnings call just got underway. Elon Musk has been speaking there. He says the chip supply was the limiting factor on the company's output, saying it is out of our control, essentially. It does seem like it's getting better, but it's hard to predict. He also thanked suppliers who he says fielded many midnight phone calls to resolve shortages faced by the company. We'll have more details from the earnings call next with our own Ed Ludlow, who's been listening in. Meantime, it's been a sad summer at the U.S. box office. Despite theaters reopening, North American ticket sales remain well below previous years, with more potential moviegoers flocking online instead. We saw a second straight weekend of falling ticket sales, with only a modest turnout for the latest installment of the G.I. Joe franchise, Snake Eyes, and M. Night Shyamalan's horror flick, Old. Those two movies brought in about $30 million combined. That's less than the previous week's debut of Space Jam: A New Legacy. This is Bloomberg.
Public sentiment towards EVs is at an inflection point. And at this point, I think almost everyone agrees that electric vehicles are the only way forward.
Elon Musk there on the current second quarter earnings call. Musk also talking about the current chip shortage, saying that while it's out of Tesla's control, it does seem to be getting better. Our Ed Ludlow has been listening in. And of course, Musk saying that the chip shortage seems to be improving, but it's still hard to predict. So what are we supposed to take away from that?
Yeah, this is the most candid that Tesla have ever been about anything. Not just the fact that something's difficult, but he basically said that the chip shortage was the supply constraint for them. Their ability to build cars was fundamentally impacted by it, even though they were able to be nimble and do things that other automakers can't do. And it's crazy because this quarter was their best ever.
Right.
You know, on the back of record deliveries, best ever financial performance. But here they are acknowledging that it was really hard, and that's something that Elon Musk doesn't do very often.
And they're still predicting 50% growth in deliveries, which is huge if, of course, they can hit that target.
Yeah, Shanghai became really important in the quarter. You know, they have this like shiny factory there that's taking on more of the burden. It actually became their main export hub, you know, taking over that title from Fremont in the quarter. The problem is that the cars that they sell there or out of there are of lower average selling price. You know, they command a lower price, but they were still able to grow margins. It was the first quarter of $1 billion GAAP net income, just incredible performance. And what it comes down to is they're just getting better at building cars.
And they're expanding on 3 continents. Obviously, they're expanding in Texas, they're expanding in Shanghai, they're expanding in Berlin. But what I want to know is Bitcoin. What does Elon plan to do? They were accepting it, they stopped accepting it. That's caused huge tumult in the markets, and the price of Bitcoin itself has still suffered.
Yeah, it's like the thing you brace for. You have this EV company that's reporting earnings, and you're like, what's happening with Bitcoin? So they still hold $1.3 billion of Bitcoin on the balance sheet. They took an impairment of $23 million. Remember, you know, when we first found out about Tesla holding Bitcoin, it was at a much higher price than it is now. It's fallen from 65,000 mid-April down to 40,000 now. In the scheme of things, a $23 million loss in that time isn't that much big of a deal. It's not, you know, it hasn't been dramatically hurt them. And they've managed to boost their profitability as well. So all in all, good, but they said nothing about what it means for customers.
Not yet. We're still listening into the call. Curious how much uncertainty this is factoring into.
Right.
Analyst takes and investors, you know, are they nervous about to accept or not accept Bitcoin, right? And what that means.
I think there's always going to be a discussion about how many people are there actually out there that think to themselves, today I shall buy my electric vehicle using Bitcoin. You know, we just can't quantify that. What it does do is it opens up the market to people that are not comfortable paying in cash or in, using traditional lines of credit, or people that are worried about security. You know, he has always been a leader of the new, whether that is electric vehicles or space or whatever it is. You know, it brings in a broader audience for him. But fundamentally, it doesn't impact the company's top or bottom line very much.
So these are mostly the bright spots. What are the weak spots?
Delays. You know, they can't get away from what's happened. They had to close some lines in the factories because of a shortage of parts. Look out the window over here, you'll see there are a lot of ships in the Bay Area. There's a backlog at US ports, and that has hurt Tesla. Semi-truck, it's been delayed sometime in 2022. We don't have an exact date, but they said there's also a shortage of cells out there right now. That's impacting the semi-truck, and it could impact Cybertruck as well, because now they're saying, we don't know when it will happen. It will just happen after Model Y in Austin, which will happen in some form this year. You know, it all seems to be getting pushed back a little bit.
Meantime, speaking of Texas, I was quite impressed by the expansion of the supercharger network to Van Horn, Hampton Inn.
Incredible.
The Days Inn. There were electric charging stations everywhere in the middle of West Texas.
So they grew, let me remember my numbers, 46% growth year on year in supercharger stations, and 46% year on year growth in the actual number of connectors. You know, they're really building out this network. Tesla wants to be the #1 EV player.
Incredible. Well, and the chargers are catching up. Ed Ludlow, thanks so much for the roundup. We'll keep listening in. That does it for this edition of Bloomberg Technology. Don't forget, lots of earnings results this week, Tuesday. Apple, Alphabet, Microsoft, and AMD all out with their quarterly results. We're going to be joined by Dan Ives of Wedbush and Dan Flax of Neuberger Berman to break it all down. I'm Emily Chang in San Francisco. This is Bloomberg.